Andy, it's like, we met at happy hour this morning and you're a guest. Welcome to Face.
Thanks a lot, Dale. I appreciate the time.
Yeah, I mean, I use Twitter to find guests of interest, and just so happened that there was an opening today. I really, most people would not. They say, "Oh, that's too short of notice." Like you have to prepare. You sound like a guy that's prepared all the
Yeah,
time for everything and anything. So nice to meet you and welcome to our community.
yeah. Thanks again. I'm new here, so I just watched your last half hour, and the technicals are interesting to me. I don't really spend a lot of time on that, but hopefully, I can give you some information that's useful to your listeners.
Okay, let me ask you this. Do you have anything you want to share on the screen, or should we just go the topic that you brought
Yeah,
up?
I really don't have anything that's particularly
Okay.
insightful to share on the screen.
So I'll move around to different asset classes, but Andy has, wants to clarify to people, what his thoughts are on the Fed, and everyone, especially after this number, is probably reinforcing a Fed pivot. But I agree with you. A Fed pivot isn't going from tightening to easing. It would be to just stand pat for a while, right?
Sure, sure. I mean, the big picture is, the Fed pivots. That happens. It does so when it has completed whatever job it's doing, in this case, fighting inflation to its satisfaction, and then goes to a balance where it's balancing its dual mandate of jobs and stable prices. And so, it's always a question about whether the pivot is, for me, it's not a question of when the pivot occurs, though obviously that's important to markets. It's really a question of whether the pivot is done at the appropriate time or not. And in this particular case, the real question is inflation dead? And obviously these two numbers from July are indicative of the inflation having at least fallen last month. So the question really comes down to, is inflation dead? If inflation is dead, it is totally reasonable for the Fed to slow down its or stop its tightening cycle, because it has to balance the impact on the economy, which is clearly weakened over the last 2 quarters. So, that's where we are. It's a question of whether inflation is dead. And
Okay. Do you use like the 70 analogy where, you had times where it would abate but not be dead?
right,
Difference between, just like markets can go straight up and then correct, or down and then bounce, that inflation could do the same thing. Doesn't mean that you're at peak inflation. It means that you're at a temporary high in inflation.
right. Yeah. I mean, listen, do I think there's going to be, there is a scenario where I could imagine sustained, 8% inflation or what, or 6 or whatever it's been, but that's not my case. My central case is that inflation needs to go to a level that is at target, which is 2% over time. And we're nowhere near that. And for me to think inflation is dead, it means that they've achieved their goal to set inflation back to target for the extended future.
Okay, yeah, you used to be with Bridgewater and Ray Dalio, correct?
I sure did. I was there from
Okay.
2010 through late 2013. Great time.
Yeah, learn a lot. Big learning curve being around him.
Well, I had been a relative value trader throughout my career at Solomon and at
Yeah,
hedge funds I managed. And so
very
going
few people remember Solomon Brothers anymore. You know what I mean,
yeah,
Andy?
absolutely. And then, I spent my time doing that in equity derivatives, merger arb, convert arb, credit relative value, and really didn't know much about macro. So joining Bridgewater really, rounded out my understanding of how macro works. And, that's where we're at now with this inflationary idea. And when I look at my full length of understanding of inflation, and I've written a couple of things that are in my public archive about inflation. The main driver that I'm concerned about is not supply chain. It's demand, and in particular, the very strong wealth creation that has occurred, partly through money transfer from the government to the private sector, and then partly through wage increases, and lastly, through relatively strong, at the macro level, relatively strong balance sheets that can allow for people to lever up, both corporations and individuals to lever up and consume. And that demand seems very strong right now to me, and it needs correcting. So I don't believe inflation is dead. And so I do believe that if they pivot, like happened many times in the 70s, inflation will reignite. That'll push long bond, that'll reduce confidence in the Fed because they moved too early.
Yeah.
Which will push inflation expectations and long-term bond yields, I think substantially higher. And those are the discount.
Are you in agreement? I've interviewed some people that many months ago, before the bonds bottomed, and I'll use CLT as a proxy. Their narrative was the great steepening. And instead, we've had an inversion. So, and these are guys. This one guy worked at the Fed for a while.
Yeah, Joe Wang. Joe Wang and I have.
Yeah. You guys buddies?
Yeah. Well, we know each other like you and I know each other through Twitter.
Okay.
A little bit longer.
Okay. Yeah. This is our first date, man.
Right. Exactly. Joe and I have been dating a long time, and I disagreed with him completely on that topic. He saw 4% 10-year yields because of this great steepening, and I disagreed because I thought the Fed would actually slow the economy and cause inflation expectations to decline, which has happened.
I'd love a break back down towards 112, maybe here 113, and we start getting back through this 120 level. We could retrace all the way to, this was a pretty major breakdown at 132.
Yeah,
I think there's more left. Go ahead.
I bought bonds and stocks on June 29th because of broad portfolio delevering that had occurred for the last year. Yeah. And felt that, the delevering of institutional portfolios had just simply gone too far. And so bought bonds and stocks. I think I paid in that range, 113, 114. Up here, I've been scaling out of those bonds. Up here, I actually wrote calls at the 125, 129 level equivalent on TLT. I use ZBs, but which are now quite a bit out of the money, and I probably should be covering some of my tail risk. I wrote some call spreads, 125, 129s. And I think we're in a range. I don't think this is, I think bonds have two pressures. One, we're obviously seeing falling inflation expectations, but at the same time, if they pivot, we're going to see rising growth expectations, which are going to hurt bonds, long-term bonds. And
QT, that's when we could have the yield curve begin to steepen.
Yeah, if we really are in a post-inflationary world with a stimulated growth environment, you'd expect steepening. And again, I think we're in neither. I think we're in a range that is because of the unknown about whether inflation is dead or not. And so my real concern is, I really do believe in, obviously a just right pivot, a Goldilocks pivot. It'd be great for bonds, great for stocks, great for the economy, and somewhat of a miracle. And if they get it just right, and this is the beginning of getting it just right, you want to own all assets. But if they
it's a belong everything.
Yeah, and
including commodity. You don't believe the commodity market's dead. I saw that.
Commodities are interesting as it relates to that. It's unclear. Obviously, if it's a growth environment, support for commodities.
Right.
Right.
Still there?
Yeah, I'm still here.
Okay. All right. So looking at S&Ps, are we in a melt-up scenario where we're going above the old highs here? in a matter of
Um,
months, or don't you think we're at least due for some type of pullback from this
Again, I don't think
2%
inflation
rally?
is dead, and I think the Fed is going to tell us inflation isn't dead through words and deeds, and that is going to keep.
Where at Jackson Hole they'll
That's where I
start?
think that's where I think the words will come, though they might come a little sooner in the minutes on the 17th, when I think they'll probably mention they discussed selling mortgages outright as part of QT, which
Yeah,
hasn't been discussed yet, and probably announce that in September. But then, that's a deed. Words in Jackson Hole, to the extent that are consistent with what all the good cops out there in the Fed are saying, which is, they're penciling in hikes in 2023 where the market is penciling in cuts. And they need to establish that, or don't. If Powell is capable of words and deeds that, push out hiking through 2023, push out cuts past 2023, the markets are going to take a tumble on that, equity markets.
okay.
It's the right thing to do if inflation isn't dead. And I think the lows are in if they act smartly. But if they pivot early and don't push out those expectations of cuts and allow them to stick, I think inflation roars back, and that's where you get the new lows in equities. New highs, that's the Goldilocks scenario. I don't think it's likely, but it's possible.
Does this action in the dollar, we peaked at 109 and change, and last week everyone said it held where it had to at 105. You have a view on the dollar?
I still preference long dollar. I preference long dollar because the rest of the developed market, the rest of the big currency pairs still have bond markets that are essentially uninvestable because of their low yields. And institutional money flows that chase returns globally are simply can't invest a ton of money in Europe, Japan, and the UK. And so I continue to think that, you want to look to buy the dollar on dips, and we're seeing a dip. So, that's my preference. I don't have a strong view. I don't have a strong conviction at the moment. My
How
strong
about
conviction,
Go ahead.
my strong convictions are range trade for bonds, pushing out Eurodollar futures cuts past 2023 instead of the way they're priced now. And I'm built a position short equities up here.
Okay, starting to build up a short position. How you doing that with futures, options? What kind of strategies, and where are you wrong on the trade? I'm pretty sure that you have risk management, or you wouldn't still be around. So when you
Yeah, I have
go ahead.
on my website, I have a pretty, and on my Twitter feed, I think it's either pinned or often retweeted. I have a framework, and that uses because I have a long history using options in my career and equity derivatives in particular, but broadly, I typically use, instead of using any sort of stop or other risk management technique, I just use option spreads to have a very specific ex-ante worst case scenario. And I never let that get worse than 2% on an individual asset of my AUM and 10% on the aggregate portfolio. And that assumes that the aggregate portfolio, every single trade goes bad at the same time, giving no no diversification benefit. And so that keeps me having a fairly low risk, low return portfolio. I'm targeting 10% annual return with at any one instant, no worst case drawdown of greater than 10%. And right now I'm about 50% allocated in risk at this stage because of the relative uncertainty.
Okay, view on metals, is it the same as dollar, or
So
if you're do you have a view on?
I like the industrial commodities as a form of growth asset right now. And so
like
I don't have a position. Copper, obviously, and all the industrial metals broadly.
Oil?
So energy, I feel the same way. I missed the bottom. I tried to buy, I think, 88s on crude and missed it, and haven't chased it up here. But I think that 8,800 range is probably a fairly good range in a pro growth environment. And The precious metals, on the other hand, I just bought puts yesterday on gold, and I'd probably add to that position, and that's because I do expect the Fed to and Powell to, with words and deeds, tighten financial conditions, and that is bad for gold. And so I'm long puts on gold right now.
Okay, will it be a correction, or do you think that gold could take out that 1680 low? We had a nice rally from here. You looking for low gold to break down, or maybe a pullback to 1740 or so?
You know,
Because wave guys would say that we had a 5-wave structure. I know you're not technical, but they'd say that this happened in 5 waves, which gives some evidence that we have had a turn and that we should get some type of correction, and then you get a 3 to the upside.
I don't have that target in mind at this stage. I'm mostly the way I trade is mostly looking at pressures versus target. And the pressure is down, and when that pressure alleviates, I'll cover, even if it's not at a particular specific target. That said, I do think you can see I have at the money puts and sort of 3% out of the money put short puts. So I'm long at the money, short 3%, and trying to capture that range. So if it goes down more than 3%, I'll be out of my position.
You ever use options to do risk reversals where, say, for example, if you were bearish gold, that you would sell calls and use those proceeds to buy puts? That's a pretty leveraged option bet. You like those at turning points?
Sure. The way I look at, so mostly what I care about, because I care about these pressures, not targets, is the delta of the structure, whatever it might be. And so I want to have adequate. I don't really take like a YOLO 10% delta position ever. But if I can get 30 to 40% deltas, and the option structure also happens to fit with my vol projections and skew projections and surface projections broadly for vol, that's when I'll structure a particular trade to take advantage of that modest alpha that I might have in terms of the vol surface.
Okay. Well, I really want to thank you, Andy. Anything you want to wrap it with?
Sure. I mean, I am an active Twitter participant. I love talking with my followers out on my public feed, and I also got a lot of demand for people who wanted sort of much more close individual contact. And if so, go to dampspring.com and look at the membership options. Some are for alpha, and some are for people who just want to understand sort of long-term better investing, and that's the private Twitter option. And I also have a lot of resources on that site for including my old legacy reports, which I post 2 weeks late, that give some insight on how I think. But I appreciate the time.
Yeah, I want to thank you, Andy. You're now my trading warrior, brother.
All right, man.
Is that okay? And you could find Andy at Damped Spring, DAMPED Spring on Twitter. And Andy sounds like a pro to me. And if you want to learn more, you know how to do it now. Really appreciate your giving spirit, and also, you're a trader. You're something presented itself, and you pulled the trigger. And appreciate you coming on board today and filling a spot for us, Andy. Maybe we'll do this again in the fall.
Love to.
Okay, so that's a wrap, everyone. Thank Andy. Hope you guys enjoyed it. You know where to find them. And you could join the team in about 25 minutes for the morning edge. Good luck the rest of the day, and we'll wrap it tomorrow. Remember, don't just count your pips, count your blessings. And me and the team will see you tomorrow. Thanks once again, Andy Constan. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.